Hello folks, welcome back. I just made a video on the market analysis, which includes the indices, oil, gold, VIX, TNX, to name a few, to just get a holistic view of what's happening in all the areas and how to see, what the price action can mean going forward. And now let's look at some individual stocks and some earnings which are going to happen in this week. So Amazon, as we know that it tried to break this here, but the earnings brought it back again inside. It all went all the way to 32.49, but didn't hold that. It didn't even hold the early 3200s because the whole market was weak and this also came down. But that 28.97 is what needs to hold in order to still have the bullish theory or rather support theory on it. If it breaks that one, then definitely there's weakness in the markets. So this is what your earnings day was. It had gapped down with Facebook and it had gone down, and then the earnings resolved it higher. It went above this but didn't close, and it's now coming down. Now the one thing is, if it wants to fill this gap, okay, this lower 3000, sorry, this is higher 2900s, 2800, sorry. So if it comes and fills the gap, that can be a good thing, but again, it's almost a 200-point move down from here, which could give good shorting opportunity to see that. But if it holds here and doesn't come down to fill the gap, then we need to see what it wants to do in the short term. Okay, so we'll see whether it goes back above 3088, 3125, or it stays below and tries to fill this gap. AFRM, this was one thing which this had earning last Thursday, I guess, right? So again, look at this. It started off with the IPO low was for AFRM. I think it opened 90, and then it went all the way. It came down, made a new IPO low 46.50. I don't know why I called this one as IPO low. The IPO low would be here, 90. Okay, sorry, that must be a mistake. So this is an actual low versus the IPO low. Probably I just assumed that it was a new stock, so nothing existed before that. So this is the low actually, 46.50. And from here, the price launched up. You can see it here better. See, so from here, the price launched up. This was the earnings day, if I'm not wrong, and then it didn't stop and hit all the way till 176. Okay, and from there it reversed the full price action, exactly 100% back, but here it didn't break the low. It held this 46.50 low and then it moved back. So this was the time when the indices were also bottoming around 42.25 area. So this was one thing which I said, if you want to take this one long, it can be a good play to test into this area. So that was around 49. So you bought that up, and then see it went all the way till I was looking for 75.81, and then this one already all the way went to 83. And this last price action of 70s, early 70s to 82 was almost on the last day of the on the day of the earning, not last day, on the day of the earning, on Thursday, I guess. So it went there, it hit this area. See, so on that day, the low was, it opened around 75, and then it did some up and down, and then suddenly it started spiking after 75, because I know I went into the kitchen to get something and I had set my alerts, and I got an alert of greater than 75, greater than 76, and I was like, what's happening? And then if you see, the price was the price was suddenly spiking. In one candle it went 4 or 5 points up, and the moment it hit 81, I got it because I set an alert for 81. Remember, I had the target there. So I was like, what is happening? Why would it spike like that? And then I asked a few folks, what happened is because these sudden spikes generally precedes or along with some news coming out. So then, they said, okay, they leaked the earnings or something like that. And I was like, you know what, if you're long into it, just protect this position, because this doesn't look normal. Nobody should be putting it on Twitter that you're releasing your earnings beforehand and then say it was a mistake. That's something really a cooked up story. A responsible company, I mean, an email would be a mistake. You write an email and you are intending to send to some executive, but it went to somebody else. That's a mistake. That can happen, but you won't go specifically to Twitter and say, this is our earnings, and then later on say, oh, it was a mistake. So I think, in my opinion, that was a conscious thing for somebody to get out, giving you a chance to exit your long position. So I did mention to my folks that this doesn't look good. This looks cooked up. So if you're long, make sure you put a stop loss, protect it. And this damn thing, right then it came down to 50, exactly 50 it hit just before the earnings itself. Or rather, earnings were out, right? They just, so it was during the before the bell rang itself, everything was out, and then it it hit 50, and then since then it went up to test, and then since then it has been fading, and it did break this low. Sorry, let's go here. It's better visible. And it also break this low of 46.50, and it came down. Now again, it is coming on the same day, or in a matter of 2 to 3 days, it is coming down from 83 to 46. That's almost 100% move, 40 points. Not almost, it is 100% move, 40 points. So that's a big move. And it would be oversold, because see, the price is coming down from 176, continuous big red candles, green candles, and red candles. So see the correlation. This should not be a surprising move, in my opinion, because if you expected this, then you should expect this as well. Okay. And here, this was your line in the sand. This was your bearish action, start of your bearish action. If you were long, that something is not right, and I should protect my profits here, and I should start protecting my capital from here. Okay. So this is it. And going below here, it's definitely bearish. There is no question, because now you're, see, the original spikes were here, and it had come down, and these are very long wicks on a monthly basis. The high is 146 and the low is 90. So it's approximately 50 points, or almost 50%, if I'm not wrong. So breaking down here is definitely a bearish action. So this would definitely give you a pause and made you think, oh my God, if not here, I did not protect, then definitely here I should protect my capital. Right. And now the whole move has been reversed, and we are just almost hanging on to this low. It broke the low, but still hanging on to it. And since this is a very big move coming down from here, and the same day move of 100%, can this pause here, to go sideways or to pull back up a little bit before breaking down? It can continue to break down. There's no nothing stopping it other than some very oversold levels. So I'm looking for 43, 41, 37, 35. That's the area I'm looking for it to 37, somewhere around 37. If it breach 37 and your 43 would be another area to look at it, because those can give some good. So in this range, it can temporarily find some support if there is no interest to come down lower. Let's see if your fibs give something. So between this 46, 43, 37, you can easily get to 17 also. Will anything stop to get it there? No. Hood went, SKLZ went, all others went. So what will stop this from going there, right? But first, this area needs to resolve. Okay, unless and until this area is resolved, we will not see anything below. So look what happens here in the short term, and then we can see whether anything manifests below 37. Okay, because this looks like a very similar price action to hood. Okay, so that's why I will not be surprised that it follows through to the price action of hood as well. Okay, so this was your AFRM. And who has earnings next week? I think Roblox has earnings. Roblox. Oh man, Roblox also, see, tuck down. It was 141 to 53. Wow, that's 141 to 53. That's a lot of move down. That's more than 100% move down. But again, see, the IPO low was 60. It broke that, came down to 53, and it's kind of holding. So this is what somehow your AFRM can also do, right? In the interim, go back. And here it's here, this green line stopped it on Friday. This was the weakness. Now I'm looking at 72. If the price can get over 72 convincingly with good volume and buyers stepping in, that can be a trend changer in the short term. As long as this 72 is maintained, expect this green line to be taken out towards 78, 79, and going all the way till this pink line around 87, 89. Okay, so this is the price action I'm looking for. So I had gone long on this one on Wednesday or Thursday, I think, but my all contracts didn't execute because it was just at the bell ringing. So I got very few contracts were executed, but nevertheless, it went good, and the price actually did hit 73 or something, and then the index was getting weaker, so I just exited with some profit. Anyway, I had a very small position, so it doesn't make sense to see it dwindling. So that was the thing. So on monthly, see, this orange line is still holding, so it's okay. We'll just put here as well that going below would be. So this I'm still looking to price to enter into this pink line, and or at least hit the pink line and then enter, then it would hit the other side of it. So 72 is what I'm looking for to. So if I don't know what day is the earning. It was 15th February, so today is 13th, so Monday is 14th, no, today is 13th, so 14th, 15th, yeah, Tuesday, sorry. So 15th is the earnings, so I'll see what price is trading on Monday or even Tuesday morning. I'll get some strangle play for this one, just like I did for AFRM. I had a 90 call and 55 put. So when it spiked to 82, I rolled my, I should have booked. I myself made a silly mistake. Instead of booking the 90 calls, I rolled it out to 95. So partially booking the profits from the rolling. So that brought my cost down for the strangle very well. And then I had 55 puts, which were very good until the, it went to 50 and then 46. So that was a good play. That severe move is what, rewards the strangle very well. So I'll see what kind of move this has generally. Roblox, I think this does have a good move. So I'll probably see if I can get some 75 call or somewhere around 75, because I don't want to go too far as well. And the low here is 64.60. So maybe a 60 put or a little bit lower put, because depending on where it's trading, let's say it is trading it's trading closer to 70, then, between 5 to 7 points, between 5 and 10 points, I may get a strangle and see. But if it is trading 72, then I may just get a lotto call, not betting too much on the puts. If the indices are also having a strength, then possibly this may resolve. The probability of this resolving to the higher can be more. TTD. Okay, TTD also, yeah, I think I had tweeted about this TTD that this was around the same price, I think 75 or something. And I said, can it go to 81 and 85? And the next day itself, it went to almost, yeah, it hit 85. So I was just thinking of booking the price here, 85. Then when indices started pulling back and all, and I got busy in that, and I kind of forget to book here, but as it came down around 83-ish, I booked my calls because, I didn't want it to lose back on the whatever I had gained. So, oh, wow, see, this line, it tried to go out, but again, it closed right under it. Okay, so now again, next week, we want to see whether it's trading back above 75. Then you still have a good chance of hitting that 85 back again, which is here, and then 91, which is here. So I think activity also moves very good. If that's the case, again, if it is trading nice and well above 75 or so, I may just do some Lotto calls, or maybe get some, or if the indices and all are weak a little bit, then I may get some protective put around 70 or below 70. What was this? This was 72. So probably below 70 or so, I may get some protective puts for it to fall down to the 60, 61 or below. And but above 75 or above 81, we can expect the price to hit 90, 91 or beyond that way. The only thing is, since there is volatility and the indices are also, in a twilight zone, even if this resolves to higher price after earnings, next day it may not, let's say after earnings it hit 90. Next day it opens around 80 or so, and it doesn't go to 90. Then your calls may, then your long play on your options may not reward you well, though it did hit the target after hours. So commons may be a better strategy to play, because you have the option of exiting at profit after hours, because see, Twilio also, my target was 250, 236 to 250. It hit that. It went to 262, if I'm not wrong, definitely above 250 after hours. So the target was met, the earnings target was met. But if you had options, then that would be a tricky thing, because it may or may not honor those prices or honor your option play the next day. So keep that in mind when you're playing with options, the earning portion of it. So TDD is done sharp. This crazy stock is not finding a traction above this red line, 900, right? Well, it needs to go over 900, then it definitely would hit 1000 plus to 1100 in this. So I'm thinking, but it is still, here. So either it comes down to this 750 to 689 area, craps it here, or it pushes up. So look at the RSI, it's also very down, and it's a weekly chart. So a good chance that, like Amazon, like Google or other stuff, it may also resolve back up at least once to, yeah, see, this is why. So it is at this demand, but this 3 months of strong run. So it's here. So it's in this box, orange box only, roaming around, doing nothing, wasting premiums. But it's still not shown any interest to be in the blue box convincingly. Now the earnings can put it back to the other end of the blue box, or it can put it to the other end of the orange box. So a strangle play on this one can reward big. So the price is, say, when is the earning? This is 16th February. So that puts it on a Wednesday, if I'm not wrong. Okay, so if it's a Wednesday, then, same week options I don't like, because a non-movement can kill everything. But a next week play, or maybe a little higher out, like a put early and a long call later, in terms of time can be good. So the other end is kind of 1100. So let's say we get a March 1000 call, or a little bit 1000 to 1100, or a CDS 1000, 1050, 1000, 1100 call, CDS. If it is cheaper, then this can reward well if it is also the upside. Then the other side would be going towards 750 or lower. So your put side, then that can also reward well if it can, if it wants to, you know, fall back and test this area. So between these two, and since it's still operating on this mid zone, I would prefer it to resolve it to the upside, looking from where it is right now. But some protection, because it's a big stock, and the movement will also be very big. Plus, the premium cost will also be big, because even if you buy a 200 point out, it would definitely be 10 plus in my opinion for the premium. So, you know, betting $1,000 just on assuming it will resolve well may not be good. You know, a little bit cheaper play to the downside may also help to, you know, safeguard that bigger premium on the side which you are playing. So that's it. That's about it. Airbnb also has earnings, I believe. So Airbnb, this 157.5 is the very strong level I was looking at. And if that can stay above it, this does have a chance to resolve to the upside and continue up. So as of now, it is still having issue here. And where is your 157.5? Where is 157.5? Oh, here it is. So this so look on the earnings day or near earnings, if prices, where the price is trading with respect to this. If there is good conviction above this, then this will resolve above this blue line towards 188, or maybe, you know, closer to 200, depending on what's the expected move. I haven't checked that one, but that is something to keep an eye on. Below that, it would be bearish. Below 157.5, it is definitely bearish, and the price can come down to test below. Now, let's say Monday, Tuesday, the indices are trading lower than 43.75, then this would also trade lower. Probably it may break 157.5 as well, trying to retest this low as well. If that is the case, then we will see how and where it is trading before the earnings to this 153 area would also be a good demand. So between 157 to 153, where it is with respect to near the earnings, and you know, that could also give a good bet on both sides. So further out in time for the long calls, and some protection below can also give a good play. I don't know if we can get to 300 or closer to 300 on this one, provided this area is resolved. But this may look as if it is setting up for a bullish setup. If it does, then probably it may hit closer to that 300. So go check the Airbnb thread I have, if I have a higher targets on this. If I do have, then or if it has reset the cycle, then you know that the price will be above this 219 or 220 on the higher side. So currently it is still traveling in this, and we'll know whether which side it resolves in the short term. Who else has earnings? NVDA. So NVIDIA also, this is post split, right? Yeah, because pre-split it almost finished. its price cycle around 529 or something. And then it had come down, and then it reset the cycle to a higher price. Now I have, again, go check the thread. This will have a higher price cycle target resetted already. And this again is a retest of the low. If it holds around here 234 to, you know, early 200s, the earnings would still push this out to resolve higher. Okay, so that's there. Okay, wow, see, when you go to the weekly, you can so clearly see the what do you call as the structuring or the boxes. Basically, see, this is one box, this is one box, this is one box. The price action is so clear, right? So if it's above this orange line, it will try to push the below line, and that's where it tried to resist here, and it pushed back. Now, with respect to earning, just see where price is with respect to this yellow line, above or below. If it is below here and still holding this low, then we can still expect the price to hit this blue line back over, or rare case, it may pull back below 200 to 175. This would be another aspect. So if I want to play earnings, then I would buy calls, a little bit longer term calls towards 275 or 250, 260, depending where it is trading. You know, if you go too far out in the strike, then the strangle may not reward that well, because this needs to move that much in order to lift up your one side option price, in order to cater to your whole total cost plus your profit. And it won't hurt to buy something under 200 puts, or maybe 175 puts. A cheap 175 put can be a very good protection in case this dies down here. But otherwise, this 289 was the price cycle number for it, and it was hanging around this for, see, so many weeks. It was just there before it broke down. So going back and retesting that could be a good idea. So probably 250 to 280 CDS may not be a bad idea to test it out. I'm not sure how much that would be costing, but depending on, you know, how much money you want to put it in, you can look for some wider CDS or some smaller CDS, or just some long calls with a little bit of further out expiry, and then some protective puts around 175, that 175 or 200. You know, if 200 would cost a lot of money, I would just go down, because once it starts breaking down, it will come down fast, and it will give a bigger move to the downside, just like AFRM did. So, you know, it can be a good reward, a risk to reward on this one. I know PLTR, a lot of people had asked me what's going on, what's going on, what's going on. So this PLTR, it hit 45 and the low was 9 to 45. So see, 9 and 45, 9. Okay, it started with 9 and it ended with a 9. So you can't make this shit up. Sorry about the bad word, but this is what it is, right? And this low was 1175. And this is almost 12, 1175, 12, yeah, right? And it's holding here, right? So the IPO high. So this is your line in the sand, 11 to 9, this box. So just like hood, if it comes down to 9, I would just pick it up just for the heck of it. Okay, then you define your risk reward, that how much I'm okay to keep and lose on at $9. So from 9 to 11, go in the, for hood also I said the same thing, go in the decrement of 50 cents, because see these number of candles here, so they can you know, be in a very tight range, and once price is in a single digit or in almost a $10 or under $10, then 25 cents, 50 cents, that's the increment you know, you need to look at. So this box, if this box, or rather here hold, then we would definitely look to push around $18. I'm sure this time they may come out with something to say that the earnings is good, or the company is doing good, or they'll post out some good numbers to hit 15 to hit 15 to 16, 15 to 18, sorry, um, between these two red dashed lines. They may do that. So let's say a very further out, few months out, 18 or 17 to $18 call, if it is really cheap, say under 50 cents or 30 cents, I don't know. I don't know how this is priced, because these days the option pricing for very cheap stocks are also very high. So see how much you want to bet and get something here, and maybe some protective. If it is 30 cents or 50 cents, then I wouldn't bother buying puts, because it doesn't make sense to double your price, right? Cost of the trade, basically. So just go with the calls. And even if it hits around this area, it may just bounce back up like hood. It may just bounce back, almost giving you a 50%. Again, not guaranteed, because you have to define your risk, how much I'm willing to tolerate below if this downside is breached. So at any given point you should have your risk defined, because the stock can play out for much longer than we can sustain our capital. So always have that in mind, which is another good one. Dash, where is Dash? Oh man, this Dash is also, I had seen it in some 200s, and then now it is under $100. Wow, I haven't seen this one for a long time, seriously. This is 110 was the low. The high was 257, and this high was 256. 257, 256. So this was higher. Okay, but nonetheless, it pulled back. So this was your protection point. Once it breached this area and came down, this is where you start protecting your profits first and then your capital. Okay, so because once the layers start breaking, then you don't know what can be the bottom, because they don't have enough history. They are brand new stocks, and in terms of cycles, they are only good until the low is broken out, or the low is the low is broken out, or the high is broken out, because a stock needs to have enough history to say this price action is good for certain time or certain price. Because if it is coming down and breaking your IPO low and then the all-time low, then your cycle numbers are breached, because now you have a new reference, right? So you just work with reference and see where price can go. So now the low was 91, 93, 91 was the low. And the weekly RSI is also really down, though RSI these days doesn't matter much, because let's see, a strong rise up is bringing the stock. I was still surprised why a company like Dash, who just delivers food or coordinates to deliver food, would be trading at $250. Anyways, it doesn't matter what I think. Yeah, so this is, see, yeah, it is so new. So this is your price action, and this is where it is holding $91 or $92, right? So anything below would definitely, bring it down a lot, between 90 to, so let's say this is 100, right? Closer to 100. So, 80, 75, the midpoints, we'll just work through quarters, because, I'll have to go and work the high and low from here, from 257. What would make sense for it to have a price cycle? I may update the charts later, so go and look at the numbers there. But let's say if I'll just remove one of the lines because it makes it unclean. Let's say if it holds this, then you have a good chance of hitting it around 120. Depending on the expected move. So you have closer to 100, 100 and 110, then 120. So a good bet here would make, again, look at what the indices are doing. If they are also rallying, then if this resolves higher, then there's a good chance it will retain its gain the next day. Okay. Otherwise, like Twilio, it will also give back its gain because the indices are weaker. They are selling off. So they will also give back the gains. So with respect to that see, if it resolves higher, then have a plan to book your gains or to have a stop loss at your capital or break even or certain percentage of profit, so that you don't lose out on those. And then above, once it starts trading above this 120, 121, you have stuff going up, 136, 140, 150, 169, all the different, whatever was the support now will become the resistance. So you go one layer by layer like that. So a strangle here can also work well. This is 90, so 105, 110, depending on how these things cost. I'm sure these premiums on these must be costing a lot, even though it's a $95 stock. The 100 point, the 100 strike or 105 strike should not cost above 5 or something, but I'm sure they must be costing close to 110, just for the heck of volatility and the option pricing. So a strangle around, these two lines can give a good reward. Just in my opinion, just buy a little bit time, so that, in this week, if it doesn't do anything, then you have enough time to, work that move out. If it works the next day, if it has a big move, direction doesn't matter. Either you're here or here, your strangle should, work out well. Cisco, it hit the 65 target I had, almost maybe few cents left. And then it happily pulled back, and now it's around 53, 54. So again, it's holding in this, in this area. As long as it's hold around here, 49 to 52, 49 to 52, this still has a chance to go up and retest this high of 64, basically 59 to 64. Oops. Yeah. So see, a nice steady rise. It consolidated for a long time. This fell was in 2001. Wow. And the low was 2002. So 2002 to 2012, it did almost nothing, tight range. And then finally it broke out in 2017 only. Okay. So see this, 17 only. So considering, see, price went up and it came all the way back here. This was $13 and the low here was $8. So assuming that, here price stayed here and it did not break below this or below this current low, or even below this 1361, 1330. So this around $13, 13 something would be a good bet to go long, because then your stop loss would be below this all-time low of $8, right? So buying here would have been a good risk reward if you were into this company, and so this would have given you a tremendous move from $13 to $65, or depending on how you looked at it and when you wanted to, or at least to this all-time high, $34. From 13 to 34 is also a very good move. And then you can see whether it wants to break out. So it went breakout, came back, tested this area, went back up, and did this. The all-time high on this one was 77. So I had a target of 65 on it, which was hit almost. And then oh, it's 82, sorry, my bad. 82. So this did tested this 786 extension, and that's why it's having an issue. And it also hit the 65 target and it pulled back. Now again, we need to see whether this area holds. Then it goes back to retest up, And then you have to see whether it actually hits that 65 and then what it does beyond that, right? It can still go and test. If it takes this 82 high, then you have, Cisco is going to be a star. So yeah, DKNG. Oh wow, weren't this one of the most stock around at one point last year, $75, and now what it is, $23, $17. Wow, dang, how the mighty has fallen. 10, what was the low? 9, 76, 9. So 9 to 17.41. Okay. So that's also almost a 80% move down, kind of, from this low to high and back to retesting this. So this area need to look. So this is candle is presenting well. I mean, if you picked it up around this low here, this high was 1950 and this came down to 1750, almost to the midpoint, a little bit here. So, if you picked it up here, then it gave a good reward up to, some 10 points, more than 10 points. And then it's pulling back. But as long as it's holding here, it's not breaching this, it still has room for upside, so the theory that if the indices finds a bottom to where we talked in the previous video, then most probably all of these growth stocks may run, because all of them have come to the demands. Most of them, so just sort out what are the good companies are in terms of their numbers, the fundamentals basically. If they have reported well and their guidance is good and all that stuff is good, then just pick those stuff. And if the index rallies and the downside is capped on them, as we talked, then all of these good companies would rally and go and retest their highs. So like, your Airbnb or other stuff, I don't know, ServiceNow, your Snow, your Net, all these good companies, FTNT, PanW, Palo Alto Networks, all these, the companies which are good, they may all run up, back up. And don't discount Facebook as well, because the chart looks fantastic in terms of where it is landed on the demand and in terms of price cycle. So it has a confluence there. So if that area holds, then this Facebook is going to move up very nicely. Good chances they'll bring out some news around it and then, do it. Roblox is there. Which was the other company? Roblox is there. CFLT and all those, right? Those companies, I mean, I'm very bad at tracking the earnings and what the guidance is or what they're doing in terms of fundamentals. So you guys need to tell me that these companies are really good. Then I can tell you, in terms of price cycle, that these may fare well. So I had said that below 65, this will be weak, and it pulled back all the way till 54 or 55. So, just watch out. It's still in this demand area. If it goes below 53, then, you have some support on this one. And then it may move back up, because see, this is also big. So it still has some room to come down and test the lower below 50. The low itself was 54. So if it breaks that, then you have it'll break down. So it's late 40s to early 40s. It may do that. The all-time low was 37. So, somewhere here, we look for some 70 to 80% of this move to find support then, if this is not held. But remember one thing, since we were in a correction, we'll just call it a correction because, so let's assume that from the high of 48.08, the price is coming down and it finds that 42.25 is not broken, the low is not broken, and we bottom around here. Then let's say we get a good nice rally and we recover whatever points were lost, or at least more than half of that what was lost. Then all the companies, see your indices, your NASDAQ is made up of all those 5 or 6 companies, the FANG-MANTI, Tesla and Apple and Facebook and Google and all that stuff. So those stocks will be the one to run max. So your indices and your FANG-MANTI and a very strong stocks like maybe NVDA or AMD, or those were the ones which, so if this is a storm and your index is your big ship, then this big ship will be the biggest to get lifted by the storm, and all other surrounding ships will be lifted, like your FANG-MANTI, your stronger stocks in the chips and everything else, and the other industries, those will get lifted very well. Now, regarding the growth stocks, they will, since most of them have come to a good demand and price cycle support, they will also get lifted very well. Now, among those, you have to sort out which are good companies and which deserves a good move. Not everyone would move in relation to the index to give to give that outcome. So be very cognizant of playing the storm when it's done, and when this is rallying, then the best bet would be what runs or what makes up the index, right? So your index and what makes up the index itself, the biggest percentage, those are the ones which are going to run the max, or which are going to give the biggest move. So first, that should be the cut, and then look at what growth stocks have come to the demand area, which also present good growth as well, and look for those. And those would be your another bucket if you want to spread it out, and take it from there. And from here, or somewhere from here, we should get a good rally back. If that is the case, then these were the ones, the stocks which I or rather the mentality which I had mentioned would work well. It's entirely up to you what stocks you want to play. Some people like Facebook, some people like Apple, some people like Tesla. So it all depends what you want to do. So when this rally was happening, when this rally was happening and it was the earning season, your Apple hardly moved. It was in a tight range. Your Microsoft hardly moved. It just retested from the low to from the low to high. And your Amazon moved from this. It gave you a 500-point move. Your, what was that? Google moved actually. Google moved, but it came and filled that gap back. So that's the thing. And Tesla, this one did not move at all. See, this whole big consolidation. Now it looks distribution because it has come down, right? Again, 841. Look for it. If it doesn't breach, and this area is again held. This this weekly was giving a better look. Yeah, so this area is again held. Then this came back down to 790, 792. It didn't come to 785 or 750. That's okay. So as long as this candle is holding, then probably this may again move back out of this green area and go up. But if it's weaker and the indices are also weaker, then expect it to come down on to fall in one of this area was already hit. Then 750 to there's 750, 757 was the area where it broke out of. So I would assume it may present a good demand there, 750 area here. So let's see if it is, this is just a retesting of the low, or it has weakness below and or wants to go up. So just play it that way. Let's see how the industries act out, what kind of news they are going to bring to give us a move on either direction. And since the volatility would be high, probably the whole year would be like this, big moves basically. So in my opinion, I would certainly take profits on on a timely basis, or at least in parts, to not hurt the profits as well as preserve capital. So that should be the mentality. Book profits timely manner and your main goal should be to preserve capital. We are in this game as long as we have the capital, otherwise we are definitely out of the game. So having that in mind, all the best to your trading. Hope you do well, and like and subscribe to my channel and also to my Twitter feeds. I'm still trying to get to the 10K followers. It hasn't happened yet. So help me get there. Okay. Have a great Super Bowl evening, and see you tomorrow.